Bitcoin and Ethereum are making headlines once again. But this time the story isn't just about price. From corporate Bitcoin accumulation to growing institutional exposure to Ethereum, Wall Street is quietly reshaping the crypto market in ways that could have a lasting impact on both digital assets.
Bitcoin drops to 62,000 as South Korea's Kospi crashes 10%. Now, I've got a How Not to Invest edition again on Korea here at the end of the show, but you've seen the previous one. There's been extreme volatility in Asian markets of late, all surrounding tech. We have SpaceX down bad. We have the NASDAQ selling off. And unfortunately, we are in a situation right now where crypto tends to take the elevator or the escalator down when tech sells off, but doesn't necessarily get the upside.
Have institutional investors already made their next big crypto move while the market is focused on price charts? The answer could reveal why the next wave of capital entering digital assets may arrive faster than anyone expects. What if millions of investors suddenly gained exposure to Ethereum without ever clicking the buy button? That possibility is now closer than ever, and it could become one of the most overlooked developments in the crypto market. BitMine is expected to join the Russell 1000 index, a move that could force passive investment funds to accumulate its shares automatically. Since the company reportedly controls nearly 5% of all Ethereum while generating staking rewards, every wave of institutional buying has a potential to strengthen its position even further. But here's where the story takes an unexpected turn. Despite this bullish setup, Ethereum still trails Bitcoin in performance this year. That contrast raises an important question. Are institutional inflows enough to change market leadership, or does Bitcoin still hold the strongest position in the digital asset space? So far, Bitcoin continues to outperform, reinforcing its role as the market's benchmark asset. The conversation doesn't stop there. Robinhood's $2 billion zero-interest convertible debt offering reveals another trend quietly unfolding behind the scenes. Major companies are securing low-cost capital to finance long-term expansion while minimizing dilution, a strategy increasingly tied to technology and digital asset growth. The bigger picture is becoming impossible to ignore. Crypto is no longer driven solely by retail enthusiasm. Institutional capital, treasury accumulation, and passive investment flows are transforming the market, while Bitcoin remains a standard every other digital asset is still trying to surpass. Do you think institutional money will fuel the next crypto bull run, or will Bitcoin continue to dominate? Let us know in the comments, share this video with fellow crypto investors, and subscribe for more in-depth market analysis and the latest crypto updates.
BitMine, that is the Ethereum treasury company championed by one Tom Lee, meets eligibility criteria for Russell 1000 inclusion. So this is interesting because this Friday is the day when they reshuffle the Russell 1000 and choose which new companies that are eligible will be included. There's a lot of information showing, including Tom Lee's words, that this is likely to include BitMine when it happens after the close on Friday, but we do not have confirmation. That said, they've been on the list, they have reached all eligibility requirements, and it's likely to happen. So the big story here, obviously, is that this becomes passive flows for an Ethereum treasury company that owns almost 5% of all of the Ethereum on the planet. They do this semi-annually where they do the reconstitution. And so anyone tracking the new members has to passively buy to include them in that index. So the bull case here obviously is a flywheel at Ethereum treasury. They stake their coin, they earn a yield, and then if it's bought and we have passive flows, maybe it causes BitMine and then Ethereum to go up. But that does not mean that Ethereum is winning right now. Obviously, it is down, I believe, about 32% year to date, while Bitcoin is only down, I think, about 11%. So, I would temper your expectations on here. That said, basically every passive investor who has a retirement account or index funds that include the Russell 1000, which is pretty much everything, will now be buying Ethereum, whether they like it or not. That Robinhood has priced $2 billion of 0% convertible senior notes due 2029, zero coupon debt, no interest. This closes in 2 days on June 25th. So 290 million of this will be used to buy back their own stock. The rest is for growth and acquisitions, plus 112 million on capped calls. This was led by Goldman and JP.
There's the advantages of digital credit to us, the company Strategy. There's advantages of digital credit to the purchasers, and there's advantages of digital credit to Bitcoin. To us, the company, we want to be able to raise capital that is non-dilutive, that also does not have maturity and duration risk, and preferred capital is actually perfect for that. Right? I'll give you an example. There's more recently, Google last week raised $80 billion of capital, and a large portion of that used preferred capital, in that case, convertible. And when you want to invest into something that has a long duration, that is uncertain what the return profiles are, is it 1 year, 2 years, 3 years, 4 years, i.e. AI, preferred capital is actually perfect for that.
Wall Street is quietly entering a new Bitcoin arms race, and the next company to make its move could reshape the entire crypto market. Stay until the end, because the battle for Bitcoin is only just beginning. What happens when Wall Street stops watching Bitcoin and starts competing to own as much of it as possible? That shift may already be underway, and the latest developments suggest the institutional race is accelerating faster than many expected. Robinhood's successful $2 billion zero-interest convertible debt offering highlights just how confident investors remain in companies connected to digital assets. At the same time, Strategy is restructuring its balance sheet by retiring convertible debt, showing that Bitcoin treasury firms are evolving into sophisticated financial operators rather than simply accumulating coins. But the real twist comes from a new challenger entering the market. Bitcoin Standard Treasury already controls more than 30,000 Bitcoin and has another $1.5 billion available to purchase roughly 23,500 additional coins. If that capital is deployed, the company could surpass 50,000 Bitcoin and become the world's second largest corporate Bitcoin holder. Could this ignite a new corporate race to accumulate Bitcoin before supply becomes even scarcer? The conversation also delivers a warning. South Korea's regulator now regrets approving leveraged single-stock ETFs after investors experienced massive losses from amplified price swings. As similar leveraged products gain momentum in the United States, the risks are becoming harder to ignore. One thing is becoming increasingly clear. Institutional capital is transforming Bitcoin into a strategic financial asset, and the competition is only beginning. Let's back.
And people are so excited about the prospects of Robinhood's price going up that they're willing to lend Robinhood effectively $2 billion with 0% interest, right? With that convertible debt for 2029. And the more interesting part is that Strategy, who, well, as I said, somewhat pioneered the new wave of convertible debt, actually is now in hot water for closing their convertible notes with all of the cash that they had set aside for STRC. So STRC had this massive cash reserve. Strategy chose to actually close out for $1.3-ish billion. One of their convertible notes that I believe was coming due in is Adam Back's treasury company. But Gen 3 CEO Samson Mow reveals Bitcoin Standard Treasury plans to buy 23,500 Bitcoin. So why is this interesting, and why do we have a consistent thread for quite a while? It's BSTR. So they could potentially go public on Friday. As we know, they already hold 30,021 Bitcoin, but once again, they're private. The 25,000 of that came from Adam Back himself. He's rich. And of course, Blockstream, and then 5,021 were contributed in kind by early investors. But they have a $1.5 billion pipe, meaning that money is sitting on the sidelines, which could potentially, around current prices, buy another 23,500 give or take Bitcoin. And what Samson is kind of lightly pointing out here is that they would be doing that well below Michael Saylor's cost basis at Strategy. Now, you know, Strategy vacillates between a 10, 11, $9 billion on paper loss. Right now, their cost basis is up in the 70s. Well, now we have a treasury company coming in, already holds 30,000 Bitcoin, can add 23,500, putting them over 50,000 Bitcoin, would make them the second largest treasury company on the planet. and their cost basis, Korea Markets chief regrets allowing single stock leverage ETF. So like picture the fire marshal, cuts the ribbon on a new fireworks factory. Then he comes back 4 weeks later with a clipboard and he's like, it's on fire. Maybe this is a bad idea. Right? So they literally approve these. Investors gain little while securities firms and liquidity providers earn most of the profits. Now think about this. So they just approved these and now you're seeing circuit breakers to the downside on a every few day basis because these people are so over leveraged that when one of these stocks moves down 12%, which is what happened today, or I guess it's overnight in Korea yesterday while we were sleeping, when the market had a circuit breaker and went down 10%, well, if you're 2x and the underlying asset goes down 12%, these people lost 24 or 25% today. So the regulator approved these, and I think it's a cautionary tale because A, the people shouldn't invest in them, but the other, how not to invest, obviously, is the regulator shouldn't approve them. But we are seeing a massive wave of approvals of similar leverage ETFs in the United States, especially as the SEC deregulates and gives a wider breadth and looser rules of the road for what can be approved.
So what happens next? Will corporations keep racing to secure Bitcoin before the available supply becomes even tighter? Or will growing financial risks slow that momentum? One thing is becoming increasingly difficult to ignore. The conversation is no longer centered on whether Bitcoin deserves institutional attention, but on which company will gain the biggest advantage by accumulating it first. At the same time, the rise of leveraged investment products reminds you that innovation can create extraordinary opportunities while amplifying losses just as quickly. That's why the companies with disciplined capital strategies may be the ones that shape the next phase of the market. If institutional demand continues accelerating while Bitcoin supply remains limited, the balance between supply and demand could shift dramatically. The biggest move may not come from retail investors at all. It could come from corporations quietly competing behind the scenes for one of the world's scarcest financial assets. Stay alert, because this race is only getting started. Now the question is yours. Which company do you think will lead the next Bitcoin accumulation race? And could that be the catalyst for the next crypto bull market? Share your thoughts in the comments. Don't forget to like and share this video with fellow crypto investors. And subscribe for more in-depth Bitcoin analysis and the latest market view.